LLC taxes and your personal return. The connection. So you've taken the leap and formed an LLC for your business. That's fantastic. Setting up the legal structure is a big step, but then comes tax time, and it can feel a little confusing. A common question is, wait, does my LLC file its own separate tax return, like a big corporation? Well, for most small LLCs, the answer is often simpler than you might think, and it directly involves your personal tax return. Here's the deal. By default, the IRS treats LLCs in specific ways for income tax. If you're a single member LLC, meaning you're the only owner, the IRS usually treats your business as a disregarded entity. It sounds dismissive, but it just means for federal income tax, they essentially look through the LLC structure and see the business activity as yours personally. So, what does that mean for filing? You don't file a separate business income tax return for the LLC. Instead, you report all your business income and expenses directly on Schedule C, profit or loss from business. This Schedule C gets filed along with your regular Form 1040 personal tax return. Your net business profit or loss from Schedule C flows right into your personal 1040 form. If you are enjoying this video, please help us by hitting that subscribe, like, and share button. Your engagement helps more people just like you discover our videos and access this valuable information. Now, what if you have partners? If you have a multi-member LLC, the default treatment is usually as a partnership. In this case, the LLC does file an informational return, Form 1060, but that form just reports the partnership's details. The LLC then issues a Schedule K1 to each member, showing their share of the income, deductions, credit, etc. You as a member take the information from your K1 and report it on your personal Form 1040, typically using Schedule E. So even here, the actual tax liability passes to the owner's personal returns. The key concept here is pass-through taxation. For most LLCs, unless they elect to be treated differently, like an S Corp or C Corp, which is a separate decision, the business profits and losses pass through the business entity directly to the owner's personal tax returns. Because the income passes to you personally, remember, you'll likely need to pay self-employment taxes, Social Security, and Medicare on your net earnings from the business. That's usually calculated on Schedule SE, filed with your 1040, and you'll probably need to make quarterly estimated tax payments throughout the year on your personal business income, since you don't have an employer withholding taxes for you. So, to wrap it up, for the vast majority of single-owner and multi-owner LLCs operating under the default IRS rules, your business income and expenses will ultimately be reported on your personal tax return, Form 1040, via schedules like C or E. It's not usually a separate corporate tax return system. It's definitely different from personal W-2 income, but once you understand the pass-through idea, it makes more sense. As always, tax situations can vary, so consulting with a tax professional, especially when starting out, is never a bad idea. I hope this helps clarify things a bit. If you found this valuable, please subscribe, like, share, and comment below. Your engagement helps more people just like you discover our videos and access this valuable information.